Hey folks, Jed Bratt here with your month of January 2020 San Diego County real estate market update. In this video, we're going to take a look at the standard numbers as we always do, and we're going to talk about some proposed legislation that may or may not impact homeownership or the desirability of investing in California, as well as take a look at some other things that might impact real estate as a whole in San Diego or California or the nation as we enter this pivotal year in many cases. It's an election year. Interest rates are doing a lot of things that we haven't done before with them. There was threats of war at the very beginning, the very first week of this decade. So there's a lot of stuff going on, and we're going to talk about some of it right now. So as always, if you find value in this, please be sure to subscribe. And if you'd like, also click the share button and share it with anybody else who you think might find value in this as well. As always, thanks for watching, and let's go ahead and get started. All right, folks, so starting off with active listings in San Diego County, we were down 33.5% year over year in December in active inventory. Now, if you recall, as we mentioned every time lately, the inventory, of course, end of 2018 was much higher than usual due to the ramp up in interest rates and therefore in inventory. But if we look back to 2017, 2016, all these years prior, you can see we're doing now, again, the same stair-stepping down in active listings each and every year, or if it continues this way, as we have done in the preceding 5, 6, 7, 8 years. Okay, new listings down 8.3% year over year. So new listings not expired that are being relisted, but fresh new inventory down 8.3%, so much less coming on the market. Pending sales up 13.4% year over year, which of course equates to more sold listings the following month, which was in December, 20.7% year over year increase. So more and more buyers that are actively searching in the market, putting properties into escrow, which equates to higher number of sold listings, which of course is also going to be translated to higher sales prices. Now, we're only up 3.5% year over year in the median home price in San Diego County, but nonetheless, we are still definitely positive. There's a lot of public figures that express the expectation of slowing appreciation this year. But I can tell you that this month, for sure, actually beginning early in December, we certainly were not, nobody was wasting time in getting around to their New Year's resolutions of buying a home. It's been a very busy and hectic, I feel like, first several weeks of the new year. But that will be left to be discovered. So a percentage of original list price to close price, just for reference, people are getting, on average, a little bit more of the original list price than they were this same time last year. So 1.7% year-over-year increase. Market time is down 11.6%. So if you're looking at properties and you're thinking, oh, well, I'm going to sit around and wait. Last year, properties would sit on the market for 10 days or 15 days before it'd go pending. I have time. Just consider this stat where, again, market time is definitely decreasing. Active market time where properties actively on the market, down almost 13% year over year. So all of this kind of equates in a different metric to months of inventory actual. So we're actually down 34.8% as a ratio of the sales that are happening in proportion to the active inventory. So that's a significant decrease. And yeah, this is the market we're in right now, folks. It's very competitive. There are a lot of buyers that just were quick out the gates over the last few months. And if interest rates hold where they currently are or continue in the progression we've seen lately, I would expect that to somewhat continue. So let's take a quick look at interest rates and see where we're at. So again, this is just 30-year fixed rate mortgages averages in the United States. This is not a fine-tuned metric. This is just simply going off of Fred's data for across the United States for many different loan types, but 30-year fixed rate mortgages. So we can see that in the last little bit, we have still continued to be trending down overall. January 9th, we're at 3.64 average. Personally, I'm refinancing a property of mine at 3%, and this is a VA loan. and that's with very little points in buying that down. I've seen refinances in the high twos. Purchase loans, if you're getting a smoking deal, you still might be around 3% for like FHA, VA. For conventional, of course, it's going to be a little bit higher. And there's a number of factors that go into that, but just speaking as far as references go, we are very low in interest rates. If we were to pull this back a little bit, you'll see still we are hanging out in the ruts similar to where we hit all-time lows before, and the Fed's fiscal policy, or rather their policy with the federal funds rate is only going to be helping this, especially if they are not continuing to keep rates overall on the upward trend as they were in 2018. So let's take a look real quick. Some of the bills that have come across the desk of the governor in California, or he's actually been involved in passing, such as rent control recently, have some implications for real estate in California, at least could. Now, this is one that I think I brought up in previous videos, and this is essentially going to, if it passes, if it gets to the ballot, it would be impacting Prop 13 provisions. So Prop 13 passed in the 70s, essentially caps the annual increases in the assessment of value of a property by which a property is taxed by 2% year over year. And that's assuming that that's actually being met with at least 2% inflation or greater. Now, this initiative, California Commercial and Industrial Property Tax for Education, a local government funding initiative, if that's not a mouthful, is expected. It's supposed the current revision is only for commercial and industrial properties, and there are, of course, guidelines that that certain businesses or commercial properties must meet before they actually trigger to be taxed, trigger the need to be taxed in this way. But nonetheless, this could certainly impact values for investors, for business owners in California. They previously passed an initiative, but that actually qualified for the ballot, but they've made some changes, and this is the one they're actually shooting for getting on the ballot. I'll link to this in the video description below if you'd like to take a closer look at it. Essentially, it would be focusing on somewhat larger, more valuable properties, but nonetheless, $3 million for a commercial property doesn't have to be that incredibly impressive of a property to be valued at $3 million. And if somebody was buying a property for their business or to rent out as an investment property just a few years ago, and let's say it was valued at $3 or $4 million at the time, and now they're going to be taxed additionally as the market continues to go up, well, I suppose it could actually play against them, because what I was going to say is it could certainly hurt them if property values continue to go up. This is really going to impact, I think, people that the values have gone up significantly over recent years, and then all of a sudden they would be slammed with this new increase in taxes, which could actually end up driving values down, ironically, because who's going to want to invest in something that has no cap on the taxable value, especially in environments of very high appreciation. So if this is only impacting commercial and industrial, then that's one thing. But I also think that if especially, and I'm not sure, I need to get clarification, but if this applies to multifamily was already hit pretty hard, in my opinion, by that rent control measure, 1482. And that's already capping how much they're able to increase rents. Now, if they were to get a double whammy and all of a sudden have their taxes increased with this as well, and again, I'm not saying that that's the case. I need to do more research and verify that this indeed would affect multifamily. But if that's the case, then they got a double whammy on multifamily properties in California, and I would become very bearish on the implications of that as far as the values of commercial property in California. So anyway, I'll link to this if you want to read more on it. And it's still right now just, they're still working to get the qualifying signatures and whatnot to qualify for the ballot. But it looks like something that very well might be voted on by Californians. And remember, again, rent control was on the ballot in 2018. It failed. 59% of California voters voted against it, and yet the governor still went ahead and had everything drafted up and passed rent control measures nonetheless. So that's also why my somewhat pessimism or being a bit standoffish about this is regardless of whether or not it qualifies for the ballot or not, is because who knows with this administration. There are some other things too. A $900 million San Diego household bond just got approval 6-3. This really only impacts, I think it's the average homeowner would be spending about $72 more a year on taxes. And I once again have to do more research on this, but there are lots of little provisions and a tax on trying to get more value and more taxes out of California property owners. Housing forecast for 2020. This is just from California Association of Realtors. I'm just sharing what they put there. So 2020 outlook, they're predicting a 1.6% GDP growth, 2% inflation, 3.9% unemployment. Single family home sales are expecting to increase by 0.8% and 2.5% increase in median price. So much more conservative than previous years. If we look at past years, median price change 6% 2015, 5.4, 7% 2017, 6 2018, 4 in 2019, and now they're looking at 2.5 for 2020. Now, again, this is for all of California, so this is very very broad, and San Diego market is not going to typically reflect the same overall picture that we're going to see in California. It's its own particular market. Real estate is very local, and so of course these numbers are not going to do much more than just kind of give you a general idea as far as the expectations as far as the overall climate of the buying of the expected buyers market. National Association of Realtors, so NAR, just in the national level, as far as their national expectations go. And this was as of, I think, early December 2019. They're expecting 2020 fixed rate mortgages to be at 3.8%. They're actually expecting a slight increase in 2021. I don't know that this is really going to go up too much, as everything really was halted in the market when the rates started ticking up in 2018, but we shall see. Housing starts, they're being conservative on their multifamily unit starts. And overall, they're expecting 3.6% year over year in 2020 for home price change. Again, national level, not in any way translatable to the local California market, or especially San Diego market, or any particular local market in San Diego. But nonetheless, just sharing this information in case you find it interesting or something to look at. I will also be attending the latest Bruce Norris event, where he presents his report of the year, report of every few years occasionally, depending on how often he does his reports. But the name of this one is Turmoil. I'm going to that in Riverside. It's going to be February 1st, and I will be sure to, of course, give you the Cliff Notes once we're done with that and see what Bruce thinks is in store for California in the coming year or years, and see what his takes are on everything. So anyway, that does it for right now, folks. Thanks for watching as always, and I will see you in the next video.